Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsati, and today I'm going to talk about the fact that corporates are rushing to raise 10-year plus funds through issue of bonds. And the question investors are asking themselves is should they invest? Why are the corporates rushing to raise longer term money? Before that, just download our app, Quick Invest by INR Bonds, where we list the newly issued 10-year bonds, which is like the Tata Motors Financial Solutions, which is just came out with a perpetual bond with a 10-year call option at a coupon of 9.3%. This bond will be listed on Quick Invest on Monday. And investors can see what price the bonds are trading in after issuance. Just to give you an idea of the kind of demand such kind of long-term bonds are seeing in the market. So download our app, Quick Invest by INR Bonds, iOS and Android for the best bonds in times of inflation, but most important, the most information, most transparency in prices, best uh, risk profile, and the easiest of in-app investment processes.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Now, coming back to the podcast on 10-year bonds. So, we see that the 10-year government bond yield, which is the benchmark, is at 7.45%. It has gone up from around 6% just last year in 2021. So, it's gone up very sharply. And the indications are, and our own INR bonds research and suggests that this bond yield will go up to 8% easily because of the heavy borrowing of the government from the center and the states. Now, there are many corporates that are coming down to issue 10-year bonds. So we have seen a lot of 10-year bond issuances in the last 1 week. Let's say Tata Capital Financial Services, they issued a 10-year bond at 8%. Now, if you just compare it to the 10-year GSEC, it's just over about 0.5%. If you annualize the GSEC, it's around 7.55, 45 basis points. It's very cheap for the company. And maybe not cheap for the issuer, for the investor, it could be expensive. Then you have Shriram City Union Finance, part of the Shriram Group, coming to invest 10-year bond at 8.85%. This is slightly more better yield than Tata Capital Financial, but Tata Capital is AAA rated. While Cholamandalam Insurance, they have raised 10-year bond at 8.47%, again just over below 100 basis points or 1% below the 10-year GSEC yield. Then you had Sterlite Grid Limited, that's again issued 10-year bond. This is linked. This is a floating rate bond largely. Then you had Torrent Power uh, uh, coming out, which is a non-financial services company, but which is pretty good. For that, they issued 10-year bond at 8.65%. You had JM Financial Credit Solutions, would have been a frequent issuer. Again, 10-year bond at 8.65%. You have Bajaj Finance coming with a 13-year bond at very fine rates of 8%. So in today's GSEC auction, the 13-year bond, 14-year bond cutoff was at 7.68%. So there is hardly any spread or a risk premium to the GSEC and showed it. So this seems to be very, very cheap for the issuer and expensive for the investor. And Cholamandalam Investment and Finance, the South-based lender, issued a perpetual bond again at 9.20%. And obviously, Tata Motors Finance Solutions issued a perpetual bond at 9.3%. 10-year, both are 10-year call options. So clearly, the corporates are liking the fact that government bond yields at 7.45%. They're able to borrow in a range of just over a spread of maybe 50 basis points, 0.5% to 1.5% over the government bond yield. And with expectations that the 10-year GSEC yield will rise very again throughout the year, then the next will they be able to borrow at these levels again, especially if RBI hikes rates in their policy in June, then all this is going to be a problem. So should investors wait and invest in such bonds, or should they invest in bonds just looking at the yields? The question investors should ask themselves, the best place to answer is INR bonds, where we put out the risk. We've taken all the risks of interest rate risk and the credit risk as well, and put in our own risk score. Thank you very much for listening into the podcast. Do not forget to download our app, Quick Invest by INR Bonds, for the best bonds to be listed. And you'll know exactly where these bonds are trading after they have been issued and listed. And you'll have a fair idea whether these bonds have done well post listing, especially when interest rates are rising sharply. If you follow the podcast on all the channels: YouTube, Apple Podcast, Amazon Music, and Spotify. And yes, do pass in your comments and do send us questions if you have any questions you want to be answered in the next podcast. Thank you very much.